I think there's three key highlights from the budget this year. The first one, of course, relates to the budget deficit surplus projections, and it's noteworthy the government is retaining a surplus projection for the year 2020-21, so the start of next decade. The uncertainty remains whether we'll actually get there, because the deficit actually looks a little bit worse in the very short term. The second focus, I think, is on infrastructure spending. A year ago, there was talk of $50 billion worth of infrastructure over the next few years. Now there's talk of $70 billion of infrastructure over the next few years. And of course, the focus there is on airports, with the Commonwealth Government taking on the construction of the new Western Sydney Airport, roads and rail. So big spend on that front. And the final focus in the budget is, of course, on housing affordability. And the three key aspects of that, I think, are enabling first home buyers to save effectively via their superannuation, so they put money into superannuation that they can later take out to use as deposit for a house. Second aspect is allowing retirees who downsize the family home to put up to $300,000 into their superannuation, regardless of any other constraints, including whether they've already breached the one, or are already at the 1.6 million superannuation limit. So that's a good plus for those. And of course, finally, the federal government is putting pressure on the states to do more about boosting supply. In other words, a reward and incentive structure to encourage the states to solve their supply problems regarding housing. So remains to be seen as to whether all this will work, but I think it is a very good move, and it's good to see this issue, housing affordability, elevated to the budget. There's a number of implications for investors from the budget. I think the first one is that at an aggregate level, it's hard to see a big impact on investment markets from the budget. But at an individual level, say if you're looking at sectors in the share market, there may be opportunities there, perhaps somewhat negative in terms of banks, but positive in terms of construction companies. And I think also as an investor, you may see opportunities down the track, or increasing opportunities down the track, on the infrastructure front. Another aspect, of course, that you always look at in terms of the budget is the impact on superannuation. And I guess the good news in this budget is that there's no major changes to superannuation, unlike what we've seen in the last few years. So the budget, I think, or at the present point in time, the focus is still on bedding down the changes that were made last year. Yes, there were changes in the budget that relate to superannuation, but they mainly relate to that aspect around first home buyers being able to put money to their superannuation for later use as a deposit to buy a home, and also for downsizers, retirees downsizing their property. But beyond that, no major changes to superannuation, which I guess will come as a bit of a relief for superannuation members.